presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 6th terrific Tuesday edition of today's Opening Bell. On the Trader's Edge, I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. My outcome each and every day is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs, what I call the three forces of life. The three forces of life are knowledge, time, and effort. You know, force number one is knowledge. And today, most of us, well, we'll have 3 meals, we'll have a few snacks, we'll feed our body. But the question is always, will we feed our mind? Each day, each of us should be setting aside $10, $15 a day for an education fund for our mind. Teach your kids to do this, folks. Teach your kids to do this. That's for things like books, workshops, newsletters. Reason being, we get a constant flow of ideas, and many of those ideas, well, they just simply become an inspiration. The best money spent is the money spent to cultivate the genius of your own mind. Yes, folks, feed your mind, for the money spent is a small price for the promise of what I like to call unlimited potential. Force number two, well, it's time. And you see, time is simply irreplaceable. And, of course, gaining knowledge, well, that takes time. Now, there are 2 ways to acquire knowledge. We can do it by trial and error, or we can hire a coach, someone who can teach us the shortcuts, someone that can compress decades into days. Each will get us to where we're going, but one will get us there much faster and, quite frankly, overall, at much less cost. That's what I had to learn the hard way, and maybe many of you as well out there. I have stopped doing the trial and error thing. Instead, when I want to learn something, I go out there and I find the best coach that money can buy, because I know I'll get to where I want to go. Force number 3, it's effort. And there's a huge difference between casual learning and serious learning. That's right. When you go out and you hire the right coach, it's all about serious learning. And it's the investment that will open up the floodgates, all the ideas that you've been looking for. If you put forth the effort, guess what? The light bulbs, they will go off. So always remember, spend the money, spend the time, and make sure you are putting forth the effort to achieve your outcomes. These are the investments that'll turn on the lights, and they'll start turning your wishes of wealth or whatever it is you are after into reality. It is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow trading off about, 84 points, trading out at 16,446. S&P down 8 points, trading at 1876. Composite off 0.5% down 20 points. Russell 2000 down 0.7%, off $8 right now, trading out at 11.18. Apple up 34 cents. It's on its way to higher price out there. Leading the charge, the upside. Boy, some big A to B equals CD patterns to the upside. EOG Resources leading the way this morning at $4 and change at 4%. Health Group, WCG, we didn't take a look at that in the prior show. Maybe we'll take a look at it during this show out here, up 5%, up $3.50. Emerge Energy Systems, EMES, up 4%, up $3.60. Carmike Cinemas, that is one heck of a looking stock chart out there. They're into the 3D Cinemaplex area. Boy, up a nice 11% here this morning, up $3.48. Anadarko Petroleum, up with volume. Big A to B equals CD patterns inside of that equity. That's up $3 and change. You've got SM Energy, up $3, or up 3%, up $2.48. To the downside, leading the charge out here right now, Athena Health, ATHN is a ticker symbol, off $15, down 12%. Interactive Intelligence, IN down 14%, off $9 and change. Looks like they were out with numbers. First quarter, $79 million versus $73, so a top-line beat out there. I'm looking for the bottom line out here. I don't show the bottom line numbers. Oh, here we go. Net loss of $2.5 million versus $1.46. So how about this? Interactive Intelligence. How intelligent is it this? On $79 million in revenues, they aren't even able to produce a profit. In fact, they increased their revenues by $6 million, and they increased their loss out there. We need to have a talk to that CPA, to that finance department, that sales department that is running that company out there. That does not sound intelligent to me. Towers, Watson and Company, TW is a ticker symbol. They're off 6%, trading down $6.74 out here. We've got TransDigm, TDG, off 3%, off $6. Amazon down 5, Google off 4, Netflix down 360, Stone Energy, SGY down 4 bucks, that's about 8%. Twitter off 10% this morning. We'll take a look at Twitter, see where I think that's at all-time lows or what have you. New Skin Enterprises, NUS, down 5%. So, where do we begin our day? We got to begin our day where we left off the last show. We were looking at the NQ. I've actually got and we're looking at the 30-minute chart out here. We're going to see if it was going to form a hammer candle. It did not form a hammer candle. We'll go back and take a look at it. However, the ES Mini did. So the S&P futures here during that session that ended at 9 o'clock, hammer candle low. That's going to be an important point to be watching here this morning. 1869.25. We know where the bulls are camped out. That's the price level, 1869.25. Now look, a hammer candle is a signal. It's not something where you just simply go rush in and you buy. Where would a buy point be? Well, I'll have to just keep watching the 30-minute chart during this 1 hour during this 1 hour show out here, and then I could give you a buy point. I guess the first place I would be looking for at the moment is a close above 1874.75. Of course, you can always buy the bottom of a hammer. Bottom of a hammer here being the lows, and so long as that area holds, which is 1869.25, then you're okay. Of course, a close below a hammer, if you're long, you're wrong, and of course that would then set up a price move down to probably this little bull sash candle that took place here yesterday morning at 10 o'clock. That low would be 1860.50. So that's on the S&P futures. This is the ES Mini. Did form a little hammer candle. It's trying to hammer out a low out there. If I go take a look at the NQ right now, let's look at the NQ, the June contract. Let's pull that back up. It did not form a hammer candle out here. In fact, it's not a bad-looking candle. That's for sure from a bullish standpoint, but it was not a hammer. I guess I need to turn off the colors. Why don't I do that for you? It might be a little bit easier for you to look at inside of Tiger TV. So let me just pull this over to a different area of my screen out here. And give me a moment to do that. Let me put this up here. Let's change that to false. That'll turn them off. We'll be all set. We can put it back on the screen. That'll be a little bit easier for you to see those candles. And if you'd like to see, I was talking about, what was it called? Care Mike Cinemas, 3D Cinemas. If you'd like to see, if you'd like to have a better vision of what we're looking at on Tiger TV here, well, I should say on my screen, then go check out the Tiger's Den, folks. Go check out the Tiger's Den, because all these charts here, they're sort of in 3D. They are in high def, that is for sure, out there. We do the best we can with Tiger TV. Let's take a look at the Dow futures for the same 30-minute chart out here. Let's go see what kind of candle form. Then we'll take a look at the Russell 2000. That is a weak link out here. Just want to see what's going on inside the Dow. What kind of candle formed out here. We're inside. It's trying to produce a hammer candle as we speak right now during this session. But this session does not end for another 14 minutes and change, so we'll have to come back and take a look at that. Let's take a look at some longer-term time frames out here. Let's go ahead. The VIX index, that's what happens to pop up on my screen. It's trading at 1360. It says lots of liquidity in the marketplace right now. So, yes, it's up a bit from yesterday, but it's below the 50-day exponential moving average. With the market yesterday, so the market was pushing down fairly low, right, about, 80, 90 points yesterday. And we did see the VIX index try to get up and test that 50-day exponential moving average. You haven't even seen that today. You haven't even seen that today, folks. What's that telling you? Or what's it telling me? Telling me lots of liquidity. It's got to go somewhere. Yeah, the QE, they're taking their foot off of the gas pedal out there. But let's face it, they're still putting $45 billion to work every month out there. They're still flooding the market with cash, and it's just really, that's a fundamental thing. I just take a look at the technical chart patterns to see what's going on inside of the markets out here, and inside of the markets, what they are telling me, what the stock chart patterns are telling me at the moment is that the Nasdaq is trying to break through its descending price channel. Today will be a real important test of that area. You can see right now as I pull that back up on the screen out here, the body of the Body of a candle is the essence of price. It's just hugging. It's just kissing the top of that descending price channel. A higher close today will be very bullish, meaning they move up to about the 36.94-ish type range out there. So we'll get our cue with regard to what the market wants to do. This is one of the areas where we'll get our cue. Certainly we'll get another cue here from the New York Stock Exchange. Let's go and switch over to the NYSE. Now, I haven't updated the chart here for the summation index or the volume oscillator, but for the last, not for yesterday's action. Nonetheless, it still is showing bullish action. The summation index is turned up out here. It would take today, in order for the summation index to turn down, it would take more than 228 net declining issues. Right now, you're at minus 801. Really the same kind of action as yesterday. Intra-session, we've seen pushes lower. We've seen the opportunity for the bears to take control. And at the end of the day yesterday, they were not able to do that. We still have the summation index, the price oscillator, the volume oscillator above zero. That is bullish action. That is a failure by the bears to accomplish anything yesterday. No idea how the day is going to play out here. What I can tell you about the New York Stock Exchange, it is strong like a bull out here. And today we're not seeing anything significant from a price erosion standpoint inside of the markets out here. Let's go take a look at indexes. Let's go take a look at yesterday's action. Let's take a look at some candle formations. Let's go see what we can see out here. Here's the ES Mini. So here's the future contract. What do we see for him yesterday? A little doji candle. Let me get my crosshair up here. Yesterday was a doji. That's where you've got the open and close really at the same price or very close to the same price out here. You can see this candle from 3 days prior. That is not a doji candle. You don't have open and close similar out here. You know, that's just nothing more than a spinning top out there. What kind of information does a spinning top give you? That's right. Absolutely nothing. When we're taking a look at Japanese candlestick charting. Yesterday's candle, whole different story out here because dojis that form up in resistance, is that resistance? Yeah, because you had a nice bearish engulfing candle. That had engulfed the prior doji candle from April the 23rd out here. That says that's resistance. You got another resistance area here taking on the doji candle back here from April the 3rd. Does that make today's session pretty important? Yeah. I'd say so, because the leaves begin to fall off of the trees out here, and right now we're in the summertime, aren't we? I guess across the nation, I guess we're got to do spring first, right? Summer doesn't take place until June out here, although tell folks in Florida that story, and they'll tell you it's basically summer most of the year round, depending on where it is that you live out here. So a lower close today. That could set up a move, especially if it closes. The ES Mini were to close into the April 28th swing point, the high of which is 1871.75. You're at 1871.25 right now. If it closes inside that, I could set up a move to test the even the low of that swing point. We'll take things one day at a time out here. Let's go check out the indexes. Oh, we'll have to do that when we get back from this first break out here. Right now, the Dow's off 74. The S&P is down 7. NASDAQ Composite, no bearish candle yesterday, no bearish candle yet today. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Would you agree or disagree with me that fear is a greater emotion than greed? Is fear a greater emotion than greed? And what does Stevie even mean by that? Well, when I take a look at the doji candle out there, we were taking a look at the dojis earlier as we were looking at the ES Mini from yesterday. I have often said, in fact, I say it all the time, I am consistent as can be about this, a doji candle means more to me at resistance than it does at a support level. At a support level, that means prices would be moving down, right? That's where you would have fear. What it means to me is that, with fear having a stronger emotion than greed, as prices are moving up, then you get that doji candle. That's where you have a little bit more of ambivalence. That's where those doji candles really mean something to me, because for some reason, the market participants, the bulls, have all of a sudden gone from being bullish to being somewhat neutral, because that's really the way that you would take a look at a doji candle, unless it's at a resistance level. Because all of a sudden you've got to pause, as you're trying to break the 4-minute mile, perhaps like Roger Bannister did 60 years ago out there. That was truly a big feat out here. So to me, with the exception, we're taking a look at the NASDAQ Composite, which, by the way, turned bullish yesterday using a set of lagging indicators. Yes, it turned bullish yesterday using a set of lagging indicators. Now, it formed a bottom out here. It formed a bottom with a doji. Here's where a doji candle does have some meaning at the lows. Here's why I believe we put in one of the reasons why we put in a significant low inside the market on April 15th. It is not so much because of this doji candle, although that's what it is. That's the April 15th session. It's because it was also a key reversal session. And a key reversal session said we had an intra-session high and low that exceeded the prior candle. If you take a look at April 14th, it most certainly did that out there. We also had a extended condition. Well, the market was clearly in an extended condition using that relative strength indicator. It's a daily chart we're looking at, using that 14 period, and it moved down into or towards that oversold condition. And then number 3, we saw a close, albeit very small, in the opposite direction. That qualified as a key reversal session out there. What do we have take place yesterday? We had this little dark blue line and the dashed blue line, 2 moving averages that I like to use out here, 2 exponential, 2 Fibonacci exponential moving averages cross over and give us a nice bullish sign yesterday. What do we have here in the markets? Even with a bit of a sell-off as we've seen here this morning, we have not seen anything but the old pause button on the remote control. That's called the bear harami candle out there. Nothing really bearish about it. Not a trading signal other than just kind of piece of information inside of the marketplace. So the week index here gave us a nice bottom down on April 15th, yesterday from a lagging indicator standpoint, and today from a lagging indicator standpoint, giving us a nice big bullish signal out here, and that is inside of the composite. And that's what's going on there on its daily chart. That's what's going on inside the week link. The NDX 100 should show us something similar as well. Well, I take that back. The NDX 100, perhaps primarily because of Apple, and Apple is now up against or up above a old resistance level, so it wants higher price out here. We actually got we got the same. Now in this case here, because you can see the body of the candle, just a tad larger than when we took a look at the NASDAQ composite. Therefore, it didn't really qualify as a doji, qualified as what's referred to as a high wave candle. Now, doji candles, they've got meaning at resistance levels. High wave candles just simply don't. But they do tell you the market is confused. Well, the market was heading lower. It most certainly was confused. You had that key reversal session. That was the indication of a bottom that formed. You got that nice bullish crossover. Looks like that actually took place either on April 29th or April 30th out here. You've got a bit of resistance. You've got this little bearish engulfing candle that took place here on May the 2nd. That says that high, 36.11.56. A close above that high would be an additional bullish sign inside of the marketplace. Here's a hanging man candle. Hanging man candles mean absolutely nothing to me the way that I use them. Many people refer to those as a bearish candle out there. I really struggle with that logic. Even the Japanese will say it's a hanging man, but they don't use them in trading and using those as a short signal out there inside of the marketplace. That's just simply how they use them. Therefore, it is the way that I use them as well. If we take a look at the Dow Jones, let's take a look at the Dow Jones yesterday, see if there were any real candle signals out here. Nothing bullish or bearish, but we do know we've got some resistance up here at that bearish engulfing candle from April the 4th. Any close above that high of 16,631.63, and that is very bullish out there. That's what's going on inside the Dow Jones Industrials. Let's take a look at the transports. Let's see what the trannies are doing here this morning. Transports trading out at 76.87. Geez, transports are not confirming any kind of bearish results that we're seeing inside of the industrials as we speak right now. You've got in the transports, you got a little shooting star here from May the 2nd. That is the opposite of a hammer candle. That says resistance here about the 77.72 level. Right now the Dow's off 70, S&P down 5. Be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released.
The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is off 56. S&P is down 4. It is Terrific Tuesday, a.k.a. Turnaround Tuesday. So if you're wondering, is the cavalry out inside the markets, the bulls? Well, they most certainly are out here. We've seen nothing but over the course of the last 2 hours, certainly the course of the last hour and a half, because this session here really just began, nothing but bullish signals inside of the market if we take a look at the ES Mini out here. Yes, bullish signals. So Turnaround Tuesday, be careful if you are short this market. The question is, do I have conviction in the way that I call the market? I absolutely have conviction. Now, I have conviction for really a couple different reasons. The first reason is I just read the message of the markets, and I'm just free to let the market give me more information and the willingness to change the view once the market gives new information. The second thing is I trade with a bracketed order. Every order has got a bracket on it. That means I know what my stop is. I know what both my exits are. Both if the trade works out the way that I want it, the way that I project it, and if it doesn't work out. And that is what this business, that is what this game is all about. If you taught your kids the rules of this game, the rules of the money game, they would do well for life. They would be able to play it, and there's no reason that you shouldn't be playing it that way too. Every trading application allows you to use a bracketed one cancels the other trade out there. If you don't have those in place right now, please, that's where you should be spending your time. That's where you should be focusing, is figuring out how you get, and if your system doesn't provide you with that, then throw that system out and get some other system out there. You can't make these things mental stops. because mental stops are what the deer in the headlights are. Price gets to, like, even when you try to buy something, you might be trying to buy something at a lower price. How many of you have ever been through this experience? You're wanting something to pull back, it finally pulls back to that area, and you're like, should I buy it? Well, wait a minute here. 2 days ago, or however long it was that you set that up, you wanted to buy it at that price. You know, have your trading plan all set up out there. Now, if we take a look at what the signals are that I was referring to in the ES Mini with regard to where the cavalry is, a nice little piercing candle that took place as we came into the 9:30 open out there. That's a bullish candle. If we take a look at the very next candle inside the ES Mini, a 30-minute chart that we're looking at, nice bullish candle, the hammer. If we take a look at the next candle it's set up, a nice little piercing candle out there. So you've got the cavalry in here. You've got the bulls. They have shown up for work, and whatever the bears are going to try to push down on them, they are set here to just simply defend their territory. If you were to see a close in this candle session, which is a 30-minute session, above the price point of $1874.75, you're trading at $1874.50 right now. That would be a bullish sign out there. Another bullish sign on a fourth candle out here, and that's what's going on inside of the ES Mini. Now, what I haven't done here today, that happens to be the Russell 2000. If it ended the day like today, it actually would be forming a hammer candle out here. You can see a nice little bullish engulfing that took place here on April 30th. So what we've got inside of the Russell 2000 here, it's trying to cement a decent low out here, a little bit of a trampoline. It is still the weakest of all of the four indexes that we take a look at it, but it is trying to form some bullish signals as well. Now, one of the things that I didn't do in the last hour was take a look at the currency pair. So I ought to do that, and we'll take a look at the U.S. dollar index as well. Right now, you've got the U.S. dollar index trading back a total of 395 ticks, 39 cents, trading out at 79.14. Of course, all because of what's going on inside the euro, inside of the Great British Pound. Now, inside of the euro, as I have pointed out on many occasions, here, let me put the weekly chart up. I think it shows that better. Inside of the euro has this uncanny pattern during the end of the year, beginning of the year, so between December and early February, to form significant tops or bottoms. In this case here, the euro was moving down into the end of January 31st, the week of January 31st, the first week of February 7th out here, and was forming, a significant bottom. At the bottom of a rising price channel out here. What it has done, what the euro has done on a weekly, on a monthly chart, it's broken through the trend line from July of 2008. It's now above that diagonal resistance. It's above vertical resistance, which now becomes support, and that is the high of the week of October 25th, that price point of 1.3831. For whatever reason, I can't tell you what that reason is out here, but the euro has broken through. The euro wants higher price. Where does it want to travel to? Looks like it wants to get up to 1.4424. That is going to put some stink. That is going to put some hurt. That is going to do some harm to the U.S. dollar index. That is the pattern that is in play as we speak right now. The next area that the euro-U.S. dollar needs to get above is going to be the high from March 14th out there, 1.39657. You get above that, that gets even closer to the fruition of a move to 144.24. Of course, the swing point that it will have to contend with on a weekly chart takes you back into the highs here from October the 28th out there at 1.4246 out there. But the euro has broken through every area of resistance that it needs to. It wants higher price. That means our U.S. dollar index wants lower price. So whether it's a weekly, whether it's a daily, whether it's a monthly chart out here, and of course the monthly trend is the bigger one. The monthly chart here broke through the resistance line. It broke through the trend line out here. It did that last month. Now you're seeing some additional conviction to the upside. That is on the euro-U.S. dollar. We switch over. We take a look at the Great British Pound. It, too, wants higher price out there, and that says that the U.S. dollar index is going to move lower. Now, inside of the pound, it eventually wants to get up to 1.80. That probably becomes the next when the housing market maybe tops is when you get the pound up where it's close to that 180-ish level out here, because then it'll be a frenzy for everyone in the UK to come on back over here to the U.S., buy real estate at, in essence, 50% off prices out there. Yeah, a strong currency buying a somewhat weak market out here. That probably becomes the next wave of real estate prices really moving higher out here. Right now, it's not too bad. You're at $1.70 out here. But the Great British Pound, it broke through a very large consolidation pattern, one that went all the way back to the 2010 time frame. The measured move is the yellow box that you're looking at on my screen. That's why I say in the 180-ish range, 1.8234 happens to be the 0.618 retracement off of the high back here in the November 2007 time frame when it was more than 2 to 1. Yeah, November. See how that kind of coincide to somewhat of a market top out here in November of 2007 and housing issues. And the reason why I say that is because at that stage I owned a number of stores in the theme parks in Orlando. And, of course, my afternoons I would maybe take off and maybe play, not maybe, I would play a round of golf or two. Oftentimes I'd play down in the Disney complex area out there and would run into folks from Europe and ask them what they were doing over here, and they said, "Are you kidding? It's 2 for 1. It's 50% off. Your meals are basically the same price in pounds or in dollars as they are in pounds, and it is much cheaper for us to simply live over here. Let alone we're buying real estate because it is 50 cents on the dollar out there, even at the market highs." So, in any event, this thing has the next area of potential resistance really becomes the swing point here from August 7th, 2009. That price level is 1.7042 out here. Let's say if we can get above that level, then you're looking at, then there's nothing stopping the euro moving up into that 182-ish mark out here. Absolutely nothing stopping it. And, it proved that it wanted to move higher once it broke through that area of resistance back here on the trading session of February 14th, the weekend of February 14th, 2014 out there. So what does that say? It says the U.S. dollar index is going to get crushed. It is going to get crushed. And, of course, the signal that it was going to get crushed was when it broke through its rising price channel. This is, a weekly chart that we're looking at, coming off of the lows back here in May of 2011. This thing had formed a very nice rising price channel. Unfortunately, it broke through that price channel back in September of 2013. It's trying to take on a support level of the low of February the 1st out there, $78.92. It has not gotten down there. That is certainly a support level. But based on the patterns that we're looking at right now in place for the euro, for the Great British Pound out here, this is suggesting that the U.S. dollar index wants lower price. Now, what does it mean that gold and silver can't get moving just simply because of their inverse correlation to the U.S. dollar index? I don't know the answer to that. Maybe at some point in time it is going to mean something out here. I don't know. But right now, what the future looks like for the U.S. dollar index is that it is going to want lower price just simply because it's a measure of the basket of currencies of the pound, of the euro, of the Japanese yen, those three basically, and the Canadian dollar. But those three, the prior three, make up the majority of the bulk of the U.S. dollar index. You got the Canadian dollar, you've got the Swiss franc, and you got the Swedish krona out there. But all we really have to do is take a look at the three primary weighted structures within inside the U.S. dollar index out here. So let's take a look at, so that covers the currency market out here. We covered not every single index, but we covered enough. Oh, you know what we should do? Let's go take a look at the ETF structures out here. Let's go take a look. In fact, I'll put the Rhodes Momentum Indicator System back up on the screen. There's the Russell 2000. Let's go take a look at the, let's go see what's going on inside of the S&P 500. We haven't done that for a while, so let's take it for a spin out here. You've got 8 of the 9 sectors are in the red, although the building sector, XLB, just by about 2 pennies right now. The strength inside the market is coming from the energy sector. It's up 44 cents out here. So let's take a look at the XLE. Let's go fishing on the daily and the weekly basis. Oh, take a look at this. The XLE right now trading out at 94. 60. Forget the 94.4. There we go. It's up now 94.59 on my system. So resistance, potential resistance. Well, only resistance out here happens to be the old shooting star candle formation that took place here on the trading session of April 29th. That high is 94.66. Volume on that session, 8.2 million shares. Volume here so far today, 2.7 million shares. Only been trading for an hour and 15 minutes. So you got volume moving into that swing point, a close above the level of 94.66, and this is nothing but a super bullish-looking pattern out here inside of the XLE, inside of the energy sector. I believe the 6th weighting structure inside of the S&P 500. So it's just trying to take on the high hurdle of that shooting star candle, but I don't see anything bearish about this chart, certainly on the daily basis. If we take a look at the weekly, see if there's any price rally. Yeah, there's a price relative strength divergent potential pattern, but it looks like this week here that is falling by the wayside. No, and you did have one pattern that confirmed. That was the week of April the 11th, but that was immediately overcome by the bulls on the very next week out there. So even though it was moving higher on less relative strength, last week was a high wave candle, again, meaning that it lost its way. Looks to me like the energy sector here has found its way again. Let's go take a look at, so that's the XLE. Let's start from the top. Let's look at the XLK. It's down 0.3%. It's off 14 cents right now. It's trading out at 36.44. Here's the weekly chart on it. Even though it has a price relative strength divergent pattern, this is still extreme. It's in a cautious mode, as it should be, but really still, as I take a look at this is extremely bullish, cautious, but leaning towards very bullish on the weekly chart out here. Let's look at the daily time frame for the XLK. See what we can find out here. You had a bearish engulfing on May 3rd. That was erased yesterday. Let's pull this back here. Your real resistance line where the bears are hanging out looks like at about the price level right around the May 22nd high at about 36.74. So clearing 36.74 would be a very bullish sign for the technology sector, number one weighted structure inside of the S&P 500. Let's go to Daisy May in Denver, Colorado. Daisy, thanks for calling. Thanks for holding. How are you doing this morning?
Pretty good, Stevie-san.
Very good. I like it.
Yeah. And I love you talking about the Japanese stuff.
Oh, you do? Have you ever been to Japan, or do you like Japanese food?
No, I wanted to study Japanese art, and I went to the University of California on the wrong year. They were doing it alternate years, and so I gave up.
Oh.
But I've always been interested in that and Zen, the Zen art and all that. So.
Yeah, no, it's very cool if you ever get a chance to travel over there. I mean, it's truly an eye-opening. It's really a great experience. Yeah. Culturally, there's so much to offer over there.
Right.
It's really amazing, and and you've got the dynamics just simply of the new kind of Japan, I suppose, all the new construction, but all of the history of the old construction. And one of my favorite trips is going to Kyoto. And in Kyoto, it's where they have so many of the Japanese temples. And each temple is a little bit different and is focused on some area, some other attribute of life out there. And so you talk about art. I remember spending just a few hours at each of the different temples that I've gone to visit over there. And just like the Japanese gardens, just like the way that they rake the rocks.
Yeah.
And it's just to actually just kind of sit there and just contemplate and focus on some area of life. It's really kind of it's a cool experience.
Well, and their whole outlook on, like even the plate that you are served of food, is a work of art, and just it used to be. I don't know what they're like now, but
no, it is. No, look, it absolutely is out there, and it's really a cool trip out there. So would you be kind enough to hold through this break here? We can go take a look at your stock for you, Endeavor Silver.
Right. I've been wanting to buy it for quite a while. So.
Okay. We're going to go back out to Daisy May in Denver, Colorado. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com.
or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Masters Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're going to go back out to Denver and speak with Daisy May out here. I can see I've got a little data feed issue on my system. My apologies. There we go. It's back in line now. So you were taking a look at Endeavor Silver. The ticker symbol here is EXK. Tell me, and you said you're looking to be able to get into it or back into it. Tell me what you're looking at and how I can assist you.
Well, I'm not great on the technical stuff, unfortunately. I'm challenged. But I had been looking at it for quite a while. In fact, I think I called under another name. I called and asked about that compared with SLW, which I'm holding for long term. And so I'm not a jackrabbit. My nervous system is, but my intellectual capacity for trading is not there.
That's okay. Okay, so you're looking for a longer term.
Right.
Buy and hold-ish type of a trade in Endeavor Silver.
Right, and I didn't catch it on April 21st, and then after that, it just kept going up, and I thought there was supposed to be another drop, and so I thought maybe I could get it at 405 or around thereabouts, and it never happened. It's gone up 10%, I think, in just 5 days.
Yeah, no, it had been, if we take a look at Endeavor Silver on a daily chart out here, just simply from a technical standpoint, if you were looking at a chart and you wanted to see the bearish pattern that, in essence, that it had been in as of late here, and that's that's as of the high that it made on February 24th, up at the 598 range. What price was doing was it was contained pretty well within a descending price channel. And price broke out of that area on a daily basis on May the 2nd. And it broke out with 1.3 million shares. Now, that 1.3 million shares was going against a little bit of a downdraft from March the 24th out there, where it had 3 million shares. So it's really like a natural area of supply, because the folks that bought on that day, March 24th, there were 3.1 million shares that traded hands that day, anywhere from 440 to 485. Those folks were probably not feeling that great about their decision when it made a low on April 21st. That was a day you mentioned, April 21st at 391. So many of those folks may say, hey, my trade was wrong. I just want to get my money back. And that's why we've seen price get up to that area. It was not done with the volume necessarily, and why we've seen a pullback. Now, what price has done is it's broken through this descending price channel, and now what it's doing today, it's coming back and in essence testing that area. Now, volume on the pullback today, 371,000 shares after going up with 1.3 million shares on May 2nd and going up with 1.5 million shares on April 29th. Watch the volume today. Let this thing come back, and because if it gets back inside the descending price channel out here, and that would mean probably if you were to see it close today, I'd say probably below your 466, maybe somewhere around the 450-ish area, then you might see a bit of a deeper retracement. And if volume is light on the pullback, your buy area probably is right around the $4.12 area, which happens to be a test of that April 21st swing point. So I would, if it rejects this descending price channel and the next move is to the upside here, then you might have to buy it at a higher price, but that would be okay too, because then this one would be rejecting a low. So you're either going to be buying it around $4.14 or so, or you're going to see a rejection of this descending price channel. At the moment, that's the best advice that I can give you. But I would try to put this descending price channel on your screen. Or just give me a call. Give me a call back tomorrow or the next day, and we can continue to take a look at it. But it's possible it may be. What you need to really see here is you need to see gold and silver continue to take off. So I'm sorry that we're out of time.
That's
but
good, Bill.
Thanks so much for you bet. Thanks so much for calling. Thanks so much for listening, folks. It is Terrific Tuesday. Basil Chapman is up next. Stay tuned. He'll be giving you a good hour. Then we've got the options hour after that. Have a great Tuesday, folks. Look forward to seeing you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.